Please and welcome to Tanks Invest, where we talk about investing, finance, and professional development. For today's video, it is a purpose only. The investment we're going to talk about today would be Ethereum, ticker ETH. First, I just want to say happy Tuesday, everybody. Hope everybody had a great Monday yesterday. So it's been a while since I last covered cryptocurrencies. It's been a couple of days since I last covered Ethereum specifically. And with respect to this weekend and Monday, we had a relatively more of a selling pressure across the whole cryptocurrencies market. With respect to Ethereum, as of today, as I'm speaking right now, we're down about 6.5%. And with this week, we're down about 10%. And with respect to this month so far, we're down about 40%. So which is been experiencing a relatively large sell-off ever since that huge pump that we had with the 4,383. And as of today on Tuesday, one of the job opening report came out. And with respect to the report, it set a new record of 9.3 million job openings in April, which in relative speaking, it beats Wall Street expectation, which subsequently had a huge drag effect to the equity market, which is the reason why on the equity market pre-open today, in the pre-market perspective, it was relatively green across the board in multiple indexes. And with respect to this direct correlation, knowing the fact that Ethereum, which is a cryptocurrency, has a negative correlations to equity market, which is subsequently dragging it down. However, as of noon today, it seems like the reversal of the equity market was relatively abrupt, which subsequently reversed back despite the green opening that we've had. So I'm going to go through a technical analysis to see where do we see the numbers going from here for Ethereum, what are the levels that we should be watching out for. Are we going to see more of a sell-off coming, or are we going to be seeing more of a pump going, ahead of the CPI report that's coming out on Thursday, on June 10th, which is a pretty seismic, influential catalyst that will be either propelling the cryptocurrencies market up or down. So stay tuned, stick around, and let's make some money. Alright, so moving on to the technical analysis for Ethereum ticker ETH, you could just see that historically speaking, ever since the beginning in April 25th, basically after the Coinbase IPO, and also with respect to the ahead of the SNL debuts, and also with respect to a lot of positive media affectation that was coming from China with respect to their adaptation and utilizations, which subsequently drove this huge, gradual green candles, which you could see majorly driven by a lot of retail investors like you and I that was buying this pump, right? And ever since that, we hit all the way to the $4,383. And as we got there, you could see how dragged up the MACD was basically forming, right? It was pretty overly bought on the high level. You could see how high tide we were, and also how dragged up the MACD was, right? Which was forming a relatively huge curve that was subsequently bound to cross down, right? Which was the death cross that we had, right? And you could see that ever since then, we sold off all the way down to at one point of the crash of the $1,800, and we had like a subliminal rebound, but the rebound was relatively, minimal because of the fact that this was a lack of substance level of support that subsequent rebound. And with respect to this level of rebound, the reason we were able to bounce so drastically from the 17 or like this $1,800 level all the way to the right here, like close to about $3,000 level, is due to the fact that this was about a concept of elasticity, right? With respect to how dragged down the RSI was, right, and how dragged up with respect to the MACD was, right? We subsequently have like a double whammy correlation effects that subsequently bounce up the supply and demand dynamics, which subsequently create a lot of FOMO of among public investors that subsequently bought up the dip, and also a lot on top of the algo trades, which is basically executed by a lot of hedge funds that have placed buy orders with their computer system. With all of those catalysts propelled the price point of Ethereum to go up at this fashion. Okay, so it got up to this level, and subsequent to that, we sold that back down because of the fact that this was a relatively non-substantive level that we have tested, right? You can see we never really had a historical consolidation level before, which subsequently gave a weakness to the support of Ethereum at that price point, and subsequently sold back down. And ever since then, we sold it all the way down even further to the 1731 because of the weakness that we've had, right? However, the weakness was relatively shortly sustained due to the fact that this was never really a support level that we have had. This was basically dragged down all the way back in March 26, which if you look at the consolidation level was relatively it was fair, but with respect to the more of a consolidated level, it was more around like the $2,350 level, right? We subsequently reversed back up to this level of 2,861, and ever since then we kind of just trending accordingly on a sideways fashion, right, within these walls that I've identified here, right, with respect to my previous videos that I've identified for you guys. The top level is basically the 2,750 or $2,800 level. The midpoint of the wall is basically the $2,450 level, which you can see that we've tested like a bunch of times, at least I would say 7 times so far. And with respect to current level, because of the fact that we have had this relatively positive job report that came out earlier today, and the equity market was relatively green earlier today, a lot of people basically sold their safe haven coins or gold, which if you check the gold price actually dipping today as well, to fund their growth stocks or like their recovery stocks, if you may, right? And also on top of their AMC, those type of Wall Street bet type of investment vehicles as well, those type of hype and pump and dump stocks are also propelling upward today because, and with all of those affectation subsequently, creates some selling pressure on a temporary perspective, right? And with respect to what level are we going to be expecting coming forward, knowing the fact that we did kind of break the $3,450 level. We're basically off by about like $100, so it's not like a crazy sell-off, right? And we are down by 5.5% right now. I know we're down about like 7.5 earlier, and the level of support that I see going forward would be somewhere around like the right here at the $2,138 level, which I foresee there is going to be like a 50-50 likelihood that we will get there. We might actually rebound around like the $2,275 level, depending on how the equity market will play out in the later half of the day. And something that we have to be aware of is that a couple of days from now, I would say exactly 2 days from now, on June 10th, the CPI report is coming out, right? And based on just how the psychological affectation is playing out in the equity market right now, despite a very positive job report that came out with the 9.3 million mark, beating Wall Street expectation, by miles, that despite this positive report, yes, we did have like a relatively green market earlier in the pre-market perspective, but it subsequently sold off, ever since 10 o'clock, on the Eastern time perspective, and it was selling down basically back to where we were at square one. That means people are kind of iffy with respect to like the expectations with respect to the recovery of the economy going forward and the outlook of the economy going forward. So across the board, psychologically speaking, people are definitely bearish about the CPI report that's coming out. Okay, so what I see going forward is that we are going to be rebounding with respect to the Ethereum price point going forward, and I think the rebound will be relatively soon around these levels at $2,350, $2,200, or even $2,150 level, right? I say more like there's a higher likelihood that we will go down to the 2,150 because that's like a strong level of resistance that will bounce back up, like the walls that we've been forming historically. And we should be having some sort of like a good momentum ahead of the Thursday. And I think with respect to equity market, we might see more of a sell-off across the board from today all the way to Wednesday night, Wednesday evening, by the market close on Wednesday. The reason I say this is because people are iffy about the report that's going to be coming out. I feel like based on just historically speaking, we have had like lukewarm or mediocre type of reports historically, and consecutively in the last 3 months so far, which is, one of the reasons why we have been dragging down the whole equity market, and which is also the reason we have that reverse correlations for the cryptocurrencies market, which is the reason that we're able to drag up the price for Bitcoin and Ethereum all the way up to these high levels, right? So I think the probability of the report coming out to be a positive one will be relatively slim. So people are basically telling you the story right now in the equity market that they are foreshadowing a negative report that's coming out, so they're going to be selling, right? And I think on Thursday when the report comes out, I feel like the report's going to come out, you know, as a surprise, not like a huge surprise, but they're going to be. I think public investors or Wall Street is going to be like, oh, it's not that negative. Like we might be overhyping it. We might be, selling the news a little bit too early, in comparisons to their expectations, right? So I foresee on Thursday we will have some sort of like a rebound across the equity market. We have to see what happens tomorrow, but I think because of the fact that on the equity market we reverse so seismically and so quickly, that majority of the people, I would say 85% of the people in the equity holding perspective are bearish on the report that's coming out. And when we have that bearish signal, cryptocurrencies market will subsequently go up just as for that safe haven effect. However, on Thursday, I see there's a possibility of 50-50 that we will have some sell-off in the cryptocurrencies market because of that surprise, like I mentioned, right, on the CPI report that's coming out. I feel like people is going to feel um, a little bit more optimistic because like we have had 4 consecutive bad reports or lukewarm or mediocre reports. That this time, because of the fact that we have been tricked so many times, or we've been hyping ourselves, staying optimistic this whole time, that our pessimism will subside because of the fact that we have been doing it this way, and by seeing some sort of like a glimpse of hope in this report, I feel like there's going to be some media affectation play that hedge funds is going to manipulate the media publication side. That's going to give some sort of like a psychological influence to investors, which subsequently going to propel the equity market up. However, with respect to that upstream of this buying pressure, it's going to have some selling pressure to the cryptocurrencies market. So that's something to look out for, right? But again, with respect to like how we're going to be playing this as a strategic perspective, I think again, right, just look out for these levels, right? Dollar cost average around like the 3,450, dollar cost average around like $3,100 level, right? And continue to consolidate and trade in these side fashion levels, right? Until we hear more notification around the global adoptions and utilization, which is the key driver of this price point, right? There isn't any other things that's driving this. This is a commodity. This is not a company, right? So there isn't really any business fundamental around this. This is just purely supply and demand dynamics and logics based on how it correlates or anti-correlates with the equity market, right? So with respect to the MACD, I do see some sort of a selling pressure, knowing the fact that we are kind of crossing down at the moment, which makes sense, right? Because the substantive level is up like closer to the 2,150, right? And we are on the oversold level on the RSI perspective. So I do see like going back down slightly a little bit more, not a lot, like maybe by $100, and then we'll go back up from here, right? So if I was you, I wouldn't mind buying at this level right now. I think this is a relatively good dip level. Like anything around like these levels are always great to buy because like we will be testing the 2,750 very soon again. Because again, we're going through these like sideways up and down pinball machine type of fashion right now. But don't put all your eggs in one basket, right? Because the CPI report will has some sort of like an influential effects that has some sort of like how do you characterize it, like a break it or make it type of mentality across the Wall Street and across investor spectrum. So it's a relatively riskier time frame in terms of like if you think about swing trading or it wouldn't be an opportune time for you to bet big at this moment, right? And I think for me, I never personally load all my money into one investment opportunities or one commodities ever. You always want to play with your chips a little bit. You never like go to a casino and you put all your money into black or put all your money into red and you just let the the dealer roll the dice or spin the roulette table, right? You don't do that. You always chip your money slowly and slowly. You're thinking methodically based on how the probabilities and the statistics are trending. That with higher likelihood of of this color will be coming up or this card will be coming up, and you basically maneuver with your cash balance from there to slowly dollar cost average to the point that you eventually beat the market, right? Because the game is rigged, like we know. And to do that, you have to be thoughtful about your cash balance, because if you just give your money away, you have no time to mitigate your risk, and you have no time to maneuver that risk mitigation at the same time. So that's something that's important to understand as investors. So just to recap on all the numbers that we just talked about today, with respect to the price levels that we need to look out for, I think the current level around like the 2,350, 2,450, again, that's like a strong resistance level that we've had. But knowing the fact that we did break the 3,450, we're below that right now by like $100. I would wait a little bit, maybe. I wouldn't be loading like all my money into, maybe I will put like 5% of my cash balance in the current level. Then we go down to the 2,150, which is again a more substantive consolidation level that we have sustained for a long time. That would be a great level for you to maybe load up 10 or 15% of your cash balance. And I think, with respect to, are we going to go down to like the $1,750 level, right? I think the likelihood of doing that would be unlikely, knowing the fact that the MACD is relatively crossed down, but the separations between the signal and the MACD line is not that separated. And also on top of that, the RSI is highly oversold already. So for you to sell this even further down, I think that will be unlikely. I think there's a possibility that we will get there if we do have like a relatively good CPI report that's coming out, right? Because if that was the case, then the equity market will propel upward dramatically, while at the same time people are going to liquidate Ethereum, or cryptocurrency as a whole, which is again a safe haven investment opportunity or vehicle that they would just use that to pump the growth stocks instead, because they see more of a positive indicator that the market or the economy is going to come back up, right? So if we're going to have a really, really positive CPI report and we're going to surprise Wall Street across the board, we might get to the $1,750 level. It's just that negative correlation effects that happens, right? Which, the 1750 is the third psychological resistance level that we've tested twice, 3 times actually, if you count the historical level before the whole pump up. But every single time we have like those black swan events that crash the market, we always hit the 1750 and we rebound extremely sharply, like a complete, just like a V shape, and you don't even see the spread or the standard deviation in that perspective. So I think the 1750 will be, I give this maybe like a 20% of likelihood that we'll get there. And I think the likelihood of us getting a positive CPI report will be, I'll give that a 20% as well. So I don't really see this happening 1750. But if we do, right, I think that's a great opportune time for you to load up. I would personally do so. I'm actually thinking about liquidate some of my holding just to maneuver through the equity market if we have like a black swan event that crashed the market a little bit on either the equity side or the cryptocurrency side. Either one would be a great opportune time for you to play the market, because when the CPI report comes out, it's going to play with human emotions. And depending on how people are anticipating this, and depending on how media affectation is going to be influencing people on a psychological level, and on top of the consecutive consolidations that we've had so far, this is a break it or make it type of momentum trade that we need to expect. So watch out for both the crypto side and the equity side to diversify your risk profile going forward. With respect to my 12 months price target, 9,800 is still my price level with a 20% of corporate adoption. But subsequently, if you buy at the current level, we'll subsequently generate 4 times your money from here. All right, so that's it for the day with respect to my technical analysis on Ethereum ticker ETH. Again, this is a relatively logical thing that's happening right now, mainly driven again by the job report that came out today. And something to look out for again with respect to the CPI report, definitely look out for it. If I was you, I would allocate some cash balance on the side right now to, to buy the dip that's going to be happening on either the equity side or the cryptocurrency side. Okay, that's something I'm personally going to be doing as form of just risk mitigation, to also maybe make a quick gains or dollar cost average in that perspective. Hopefully you guys get more clarity and more transparencies around the strategies that I'm approaching going forward, and how I'm going to be playing with respect to this like macroeconomic dynamics and the more coming up catalysts that we should be watching out for. kindly hit the like button, the subscribe button, and also that bell notification. And watch out for the next video coming up. Take care.